Our college game was we played Super Smash Brothers. That was our thing. Dude, we would sit there like I had three guy roommates in college my sophomore year, and like we would just sit there for hours and hours and just play. And you remember Roy? I would just stand there and he had that charge up move and he'd be like, whoa, and I'd just wait for someone to come near and knock him off the edge. They'd be like, dude, that's not even playing.
Right. Every time I think about those days, I just relish like how much free time there was in college to do that type of thing, you know?
Yeah. Well, it doesn't your line of work sort of allow for, I mean, I guess it's not necessarily free time because I think people that are investing work a lot more than people realize. Like you just wait for numbers on a screen to go up, right? But it's unstructured or maybe like flexible, not necessarily free time, but flexible time.
Totally. For sure. Yeah. Which is nice.
Well, I guess we can start kind of talking about that. I mean, what I usually have an intro prepared, but I wasn't sure after our conversation yesterday how exactly to intro you. So maybe talk a little bit about what you would consider like your position in the Bitcoin space, how you're furthering it along, and what SAT standard capital is.
For sure. Yeah. Just a little bit of background on me before getting into Bitcoin. So I first dabbled in Bitcoin in 2016. At the time, I was working for a healthcare IT company here in Kansas City. A lot of people have probably heard of it. It's called Cerner. They're one of the big three medical records providers for hospitals, doctors' offices, pharmacists, things like that. So I worked there straight out of college, grew up here in Kansas City, came back home to work after school, and spent my first 4 years working at Cerner, kind of learning all about their products, and then decided to venture out on my own and build kind of my own company, still working in the same space. So we did a lot of consulting on Cerner software. We built some proprietary software as well. And so I did that for about a decade before diving in full-time to the Bitcoin space, which for me was selling the previous company about 2 years ago now almost, and just focusing on Bitcoin full-time. And so when I first made that move, like a lot of people, I didn't have an exact plan, right, on what that would look like. So me and a couple other guys started a Kansas City Bitcoin Meetup here in Kansas City. So that's been a lot of fun. And then pretty much right away, I started investing small, angel-sized checks into Bitcoin companies. And so over the last couple of years, that's kind of grown into what SAT Standard Capital is today. So what that is it's basically a holding company for all of my personal investments. And then I also run a syndicate on Angel's List that allows accredited investors to invest in opportunities that I bring forth to the syndicate.
And so you typically lead these rounds, you do the due diligence, you're determining whether to invest or not. And these accredited investors, if you open it up to outside, can kind of piggyback on and add additional capital from outside that you would have otherwise could have provided yourself if you wanted to. Am I understanding that right? Is that kind of how that works?
Yep, exactly. Yeah. So the way Angel's List works is you can be what's called the lead, and you can create your own syndicate that then other people could come join. So that's what I've done specifically to invest in Bitcoin companies. And so I'll go out, I'll find deals to bring to the syndicate. I'll talk to the founders. If I hear, Swan, for example, is a company the syndicate has invested in. If I hear, they're getting ready to raise their next round, I'll talk to Corey, get all the information about the details of the investment, write up a nice long memo about it, include information about historical company numbers, what they have planned as far as features coming out in the future, what their plans are as far as raising additional venture money in the future. Kind of tie all that up in a bow and then email it out to the members of the syndicate, who then can determine whether they want to write their own check into the deal as well. So it's kind of a way to aggregate a bunch of smaller checks and then write one larger check to the company, which they value from their perspective because it's just one entry on their cap table, if that makes sense.
Right. And then Angel's List or the syndicate manages beneath that kind of layer 2 investors, if you will.
Exactly. Yep. So all the communication from Swan would come to me in this example, and then I would filter that out to the folks who had invested. And yep.
So you said you worked you started your own company that got acquired by Cerner, right? Is it? So how?
Yep. So
that's healthcare, right? How did you learn how to raise capital, become an angel? That seems like quite a a leap.
Yeah, totally different field for sure. And over the years, the years I was running the company, which was about a decade in total, I had been messing around with angel investing on my own, just kind of outside of the Bitcoin space. So writing like small checks into like Angels List deals, for example, writing some checks into like some local Kansas City companies that, just were friends or family members or whatever. Yeah. And so that's kind of what started the journey. And then for me, it was kind of like similar to the Bitcoin rabbit hole in a way where, once you get passionate about something, you just consume like all the content there is about that topic. So for me, that meant, reading books, listening to podcasts of people like, Jason Calacanis and those types of people.
Yeah, the All In.
Yep, that's the All In podcast. Yeah,
they somehow tote the line between educational and entertaining in a really careful way. Like it's funny and I learned things. That's what we try here too. But we'll see if that we achieve with the what we're looking for.
Totally. And yeah, being a founder, myself, goes a long way too, just talking to other founders and
because you have that experience on that side.
Exactly. Yeah.
So know
tell if they kind of
when it's good to raise capital, when it's a bad time to raise capital. I'm assuming like from the founder's perspective, you can sort of put yourself across from the table and think of it more strategically.
Exactly. Yeah. And I think especially in the Bitcoin space, a lot of the times founders tend to be, younger just because Bitcoin kind of trends to the younger generations. And they may not have any experience of, being part of a startup prior to founding their own company in the space. So a lot of the times I try to like differentiate myself as an investor as someone who can offer, help along the way as far as, forming the company, maybe like on the business development side. A lot of the Bitcoin founders tend to be very technical as well, and maybe not have as much experience, with the like marketing or
the
business development,
side.
Things like that. Exactly.
I find that that's common where, especially in the smaller or like the earlier stages of companies, the VCs and like we'll join like the board of directors even. Is that something that you've done before, like taking a board position or something that you'd be considering in the future as you grow your venture?
Right. Yeah, I have not done that to date. I would definitely love to in the future. Typically, the way board seats get doled out is when a company raises...
keeps them all.
Yeah, keeps them all, yeah. Yeah. But yeah, like when companies get to a little bit of a later stage and they start raising like bigger rounds of capital, say it's like a Series A round, and a big venture firm's going to write like a $10 million check into the round. Typically, they would require a board seat in that sense at that stage of the company.
Why is that?
Just to have more control over their investment.
Because they're writing such a large check. They're like, okay, no, we're not throwing this $10 million here and not having any say so.
Exactly.
Yeah, so the opposite of what happened with FTX.
Yeah, that whole thing was amazing on so many different levels, but specifically from the venture capital standpoint. Right. I mean, you had some of the largest venture capital
most notable
firms. Yeah. I mean, just writing massive checks and just doing zero due diligence into the company. So they just got caught up in the hype.
I love this guy. He's playing League of Legends while he's fundraising,
Right. Yeah. And I know like it's already started. I mean, lawsuits are coming against these venture capital firms. That,
by the limited partners, I assume.
Yes.
So this is in the example that you were mentioning earlier about set standards, like, okay, you're the general partner, right? You're the one doing the DD, deciding whether or not to raise the money, how much money you're going to give them, if it's the valuation appropriate. And the limited partners are these people who invest outside. Like, it's like, okay, cool, I've got a deal. You can put in a couple $1,000 if you want to get in, and you'll get a percentage of the allocation, right? That's the limited and partners, and those are the ones who are suing are they suing FTX or are they suing like the general partner?
So in this case with the FTX debacle, the limited partners are trying to sue the general partners and like the venture capital fund that put their money into this investment without doing the requisite due diligence that they should have.
That is something that I guess like I didn't really consider about when you're a general partner, you have all the liability, right? So.
Right. And the way venture capital funds are structured, you can insulate yourself quite a bit from those types of liabilities. But in this case, I mean, it was just so flagrantly mishandled by everyone involved. Right.
They're not getting away.
I'm not sure it's going to work in this case.
and that's like creating a separate entity for each fund, right? And then having the management company be a separate entity from the general partner. I've seen like some structure, like diagrams, but it seems complicated.
Yep. I mean, it sounds complicated. In reality, it's not too complicated. You have, it's pretty easy to spin up these Delaware C corps, and then, like you said, you'll have one for the management company. You'll have one for the fund itself. Typically, you might have a third if you have like partners that are also operating the fund with you. But a lot of these things are kind of baked as far as getting them up and running. And there's like great service providers in the space that can help you with this. Like AngelList, for example, we mentioned them earlier.
Yeah.
They have a really great product that helps like smaller funds spin up, in a matter of weeks. And they kind of take care of all the formation stuff for you, which is cool.
That administrative side, so you can focus on deal flow and picking due diligence, picking the right investments, doing DD.
Yep.
It does seem like with the private markets, there's a lot more opacity to the investing process. Like, given that, I mean, I assume that the reason you continue to look into private markets is because the return potential is higher. But why not, like, with all the regulations and the level of like filings that public companies have to adhere to, what about the private markets attracts you to invest in that relative to the public markets, or do you do both?
Yeah, for me, it's mostly all private markets now. 5 years ago, I would have given you a different answer where, maybe half of my investing capital was in public markets, like in the S&P 500, and maybe the other half was in private markets. But now I've shifted pretty much all of my investment part of my portfolio into the private markets. And for me, it's just a function of return, like you said. By the time a company is public, the majority of the growth has already happened for the most part.
Right.
Especially now where companies are staying private longer and longer than they ever have before. So it's hard to get, return on your capital in the public markets compared to the private markets where, if you get lucky and you hit a home run in the private markets, you can, 100x, even 1,000x your capital. That's not out of the question. So I mean, that's not happening most of the time if you're just going to buy Apple or Google or whatever.
Right. Yeah, you're going to be waiting a few decades for that
at
bare minimum. And that's during a, hyperinflation or a historically high inflationary environment coming up where, I guess like we were talking about that side of being active, and especially in the earlier stage founders who are more technical, maybe not so business skilled. It sounds like another part of the private markets that maybe attracts you is your ability to like lend a hand and like actually make a difference and help these companies take their idea into reality and turn it into something. Whereas when you're investing in Apple stock, you're just kind of like, okay,
along for the ride,
30%. Thanks, Tim Cook. Like that's.
Yep.
So
no, you're right. Yeah. I mean, part of it, aside from like the potential, gains being greater, is definitely a way to try to have a little bit of impact in what you're investing in. And so for me specifically, like I try to help with like the business development side of things for founders who may not have a strong skill set in that area. That's something I enjoy, something that I had a lot of experience in my previous company. So I don't mind, trying to help folks get connected with other people in the space that might be beneficial for their business. Really just as much as the founder, is willing to let me help. I'm usually pretty open to kind of lending a hand wherever I can. And it just makes sense too, because you're kind of, you're furthering along your bag, so to speak.
Right.
So
you're shilling your bags in an ethical way.
Right.
And I guess that like makes me think like, with Bitcoin, it's pretty easy. You just buy and hold, right? And historically, you can look at the compound annual growth rate. It's pretty impressive. Your 1 year, year-over-year return doesn't look too good, but I wonder, what do you see like similar in that same kind of light of the last question? Like when it comes to private markets, why invest in private companies and private Bitcoin companies when you could just buy Bitcoin and, kick back and relax?
Yeah. No, I'm glad you brought this up because this is like the number one question that a lot of Bitcoiners have when they, when somebody mentions to them like, hey, have you ever thought about investing in a Bitcoin business? They're like, why not? Why not just hold Bitcoin, right?
Can't self-custody my my safe notes,
Yep, exactly. And that's originally how I thought about it too, to be honest. It's like you have to determine the opportunity cost and whether it's right for you to go even further out on the risk curve, right? I mean, Bitcoin is already, you and I probably wouldn't consider it risky, but to many it's pretty far out there on the risk curve.
What risk?
And then and then you have venture capital even further out on the risk curve. But in my opinion, like we as Bitcoiners, if we want to make sure that Bitcoin succeeds, I think we have a duty to try to support the companies that are building the surrounding infrastructure that's going to make Bitcoin accessible to normies, right? And so I think that it's a little bit of a way to kind of give back to Bitcoin. And also, if you do it right and you pick winners more than you pick losers, like most likely you're gonna outpace the growth of Bitcoin itself anyway. And so it's kind of a double whammy there if you can do it well.
Are there other considerations that people should take into account? Like, for example, for U.S. investors, particularly, like obviously anyone's got to be accredited. So higher net worth individuals, like is there any kind of tax advantage that someone in that like position could have relative to just buying and hodling Bitcoin that would also make that type of venture more attractive?
I think so. I think number one, you have to have a pretty decent size of investable capital to really even consider private equity in the first place.
Right.
If you're someone who wants to hold like $10,000 worth of Bitcoin and hope that it turns into $1 million one day, that's awesome, and that's what I would tell people in that scenario to do. If you're maybe someone who's older and has a larger portfolio to invest, I think kind of splitting up your Bitcoin allocation between Bitcoin itself, which would be the majority of the allocation, and then peppering in some of the private equity stuff for part of the allocation as well, makes sense. On the tax front, really the only time you get a tax benefit would be like if you have a loss to write off 1 year. If one of your companies goes to zero, cough, cough, FTX.
well, there, and I guess this may be a bit out of the scope of this conversation. So if it is, just let me know. But I thought like when you're early, maybe this is only for employees, so this is maybe where I'm wrong, but like I've worked at a few startups in my career, and like a lot of times there's just tax advantages to where if you buy like company equity early and hold it for a certain number of years, I forget what it's even called, but you essentially can get like a tax preferential or maybe even tax free. Is that only for like people who work at that company and not from outside money, even though it's the same round?
Yeah, I think employee stock benefits vest at different times, and then you could potentially have tax consequences there, whether you let it vest the entire time or not. And I know that applies to founders shares as well.
Right.
I think it's like 7 years maybe, or 5 years.
Yeah, I think it's 5. I want to say it's like if you're really early stage and you hold a company equity for like that was super early, basically like you don't have, if you hold it for 5 years, I don't think you have to pay capital gains on it if you meet certain other, like, everything in taxes, like read the fine print, like not tax advice, not financial advice, all that, but I was just curious because like given that it is a very difficult, I mean, it's you're like racing the best horse, like,
yep.
And so like you've got a very high bar to meet, and given that the most early stage investing historically like goes to zero, there's got to be some kind of compelling reason why you do it. Otherwise you wouldn't do it, I would think, right? I don't imagine you're in the business of like intentionally losing money. So
exactly. It's the whole 9 losers to 1 winner thing.
And
then your one winner pays for the other 9.
and that's what you're saying about like the magnitude of returns there. It's like when you do get that winner, you can get 100x or even 1,000x, which, if the other 9 go to zero, it doesn't matter, right?
Exactly. Yeah. And that's kind of what's led to a lot of like the spray and pray mentality that you see with a lot of more traditional venture firms where, they identify a sector And then they just write tons of small checks into basically anything in that sector and kind of just hope that one pays off for the rest of the fund.
But illustrative of sort of how we got into this mess with Web3 and the FTX stuff, where people were just like, whatever. Like that's so interesting because like coming from economics background, like I blame it on the Fed, but I guess it's a derivative order effect of the Fed. Because it's just like the interest rate was zero. They're pumping trillions of dollars in the economy. For heaven's sake, I mean, FTX got PPP money.
Yep.
All for employees. What were they doing with? Anyway, I won't get.
No, you're right. I mean, it's it all goes back to kind of the world that we live in post GFC, right? When the money printer really went into overdrive, and there's an ever increasing amount of capital that's looking for a home and looking to find a return that outpaces inflation. And so over the last 10 to 15 years, more and more of that capital has just moved further and further out on the risk curve.
On the risk curve, right.
And that led to, just massive amounts of capital in the venture industry. And over the last, I'd say 2 to 3 years specifically, a lot of that has found its way into quote unquote crypto. And so you have the likes of, A16Z, Paradigm, these guys raising literally like over $1 billion for some of their venture funds.
To throw a dartboard.
To throw at dartboards, yeah. And I mean, that hasn't trickled over into the Bitcoin specific ecosystem as much, which is interesting. I think the last time I did some rough math, it was around like 2% of venture money in crypto was actually dedicated to Bitcoin companies. So the other 98% was all the other stuff.
This is why being a Bitcoiner is not the easy road. Like constantly it's littered with traps and distractions. Like, I mean, I imagine that like when you first got into crypto, it wasn't a straight, narrow path, right? And
right.
I mean, on the one hand, like I want these VCs and those closest to the money printer, I want them to understand and invest in the ecosystem because, as you acknowledged earlier, it helps development, it helps push it forward. But it's so important in what they invest in too, right? Because if we're investing in the wrong things, we're now maybe sort of damning ourselves. And it's like the big fight is against the Fed and the global central banks. So each time we self-immolate by like one of these blowups, even if it is in the altcoin space, whether it's FTX or Celsius or BlockFi or whatever, like these things, while they sort of highlight the unique offering that self-custody Bitcoin provides, but at the same time, because most people aren't there yet and they don't understand that distinction, they wound up writing off Bitcoin because when they see these things. And they're like, oh,
exactly.
Like, I don't even tell people I work in the crypto industry anymore. I tell them I work in IT because in the peak of the bull market, people are like, oh, I would say I work in the crypto industry. I help people take self-custody of their Bitcoin. Like it's the most important thing in my life is for you to get your coins off exchanges. And they're like, oh, like, should I buy a Dogecoin? What do you think? Like CryptoPunks look pretty cool. And And it's like those things actively hurt the adoption of Bitcoin deeply. Because I just don't tell people about like the sound money properties of Bitcoin and 21 million and like censorship resistance, permissionlessness, because it's frustrating to like get associated with when they lump it all in unsuspectingly. So I think, anyway,
No, I agree with you. And I was just going to say, I think the last few months with all of the crypto ecosystem blowing up and Bitcoin being unaffected, right? I think we now have concrete examples to point to why the Bitcoin only thesis is sound, and why it makes sense to focus only on Bitcoin and nothing else. And now we have actual examples that even like everyday people have heard of and it makes sense to them, right? Like even my parents, for example, asked me about FTX. Like it's everywhere.
Right. Yeah.
So explaining to them the difference between Bitcoin, which didn't enable any of this, and everything else is much easier now than it was before.
It is so counter. Like I've had to explain that too. It's like, no. This isn't a problem with Bitcoin. The FTX thing is actually the exact highlight of exactly why Bitcoin was created, because not your self-custody, not your money. Whether it's like, it could be like even cash. Like you can't, I told my, my parents this the other day. I was like, you cannot self-custody dollars. It's impossible. And my dad was like, well, I can self-custody cash, like put it in my safe, guard it with a gun. Right. It's like, dude, they'll print it out from under you. Like you cannot self-custody it.
Especially a meaningful amount, right? I mean, you can maybe put $100K in your safe or something, but if you're somebody that's like worth $100 million, then what do you do?
Yeah. And then like you've got the idea of, okay, now I've got physical vector of attack, like arson, or like when you've got more dollars in your safe than the darn building is worth that it's protecting, it's like, and this is exactly why people wind up putting money in custodians. And this is exactly how we got to where we are today. And
yep. I think the other thing too that I've been taking the opportunity to explain to people now is what an advantage being able to print your own money out of thin air can create.
Oh yeah.
For a lot of the crypto space. I mean, just sticking on the FTX example, I think they held 40% of the FTT token that was printed out of thin air, and then they used that to inflate the value of it, and then use the inflated value of their token they printed out of thin air to inflate the value of their equity, because they could go to venture firms and say, we have X billion dollars of FTT token on our balance sheet. We have this many, users, and then they apply some multiple to that, and it's just all made up. It's all funny money. And yet, they're able to be a $40 billion exchange in 2 years. That was all just quicksand underneath. So I think that's the other thing that even more and more normal people are starting to understand, like why Bitcoin is different. Because Bitcoin can't be printed out of thin air. There's no pre-mine. There's no marketing department.
You can run your own node.
Yep.
That's the coolest thing. Like when I like hooking up a wallet to your own node, and it's like, dang, dude, I'm like running this independent sovereign copy of this money, and nobody can change. It's profound. It's something you said earlier. It's like it's simple. I think we were talking about in like investing. Like it seems simple, right? But it's actually quite complicated, and it serves Bitcoin's the same thing. It's like it's quite a simple thesis of what it offers. It's like permissionless money, peer-to-peer cash, right? But under this, I mean, it's incredibly complex. Like how it actually accomplishes said value proposition.
Rabbit
holes
sure.
never ending.
I think the best like description that I've seen is hard money you can't fuck with, right?
I like that.
So like when you're running your own node, using your own wallet, totally self-sovereign, that's definitely how you feel. Like nobody can fuck with my money. That's quite the feeling.
Was that Jason Williams? That was the title of Jason Williams'
Jason
book,
Williams.
right?
Yep.
Yeah, he's a funny guy. I half the time I read his tweets and I'm like, okay, he's literally shitposting. There's no truth to any of this. He's like going to him and Mike Alford were like going to the World Cup to see like, US, Italy. And somebody's like, they're not playing, bro. Like that's not a game. That's not a game, but okay. And he's like, bro, I got tickets. What are you talking about? So you might have gotten,
I think a lot of
been scammed.
Yeah. I think a lot of those, and just, I mean, I'm not picking on him specifically, but a lot of the Bitcoiners that were also into a lot of shitcoin stuff, like he was a big investor in BlockFi, for example, him and Pomp, are starting to come back to the Bitcoin only thesis now. And so I think we're just going to see more and more of that over the next couple of years, right? As this washout in crypto continues. A lot of former like hardcore Bitcoiners who kind of moved into crypto land and got burned are now going to be coming home to Bitcoin. So I think that'll be interesting to see that play out, whether, the community welcomes them back. I'm sure everybody's going to have a different reaction, but the cool thing is Bitcoin doesn't care, right?
Bitcoin doesn't care. It's made for enemies, and the people who, it really like it's intentionally like, what do I call it? The honey badger, right? Like it's designed to be adversarial in a way that it makes it stronger by doing so. Like each node that fights for consensus, it it helps solve which one is the truth or the proof of work, like the longest chain. Have you read about this stuff with like the full RBF flag debate?
Yes. Yep.
Like, it's like, I think this is good that we're arguing like kids in a schoolyard. Like, looks like some of them about to throw some punches, at least online. But this is good, like, because we're also, I mean, in some ways you could say like we're not ossifying the protocol because we're making changes, but at the same time, it's like we are strengthening it because both sides are vehemently adamant about their position. And what you're seeing is like it go through this sort of maturation, growing up process where like Taproot was kind of similar. Like there was like, oh, I don't know, is speedy trial going to pass? And then it passed and it was a big nothing burger. And like, I don't know, most wallets still don't support Taproot, but the whole idea is like, okay, China mining fell and it didn't kill Bitcoin and it made it stronger because it's more the hash rate's more decentralized now than it was. And, each time that you try to attack Bitcoin, if you don't kill it, it strengthens. And so, do you have like an opinion on the current, I guess, like protocol debate topic about full RBF?
Not on that specifically. I don't know enough about it. But just on Bitcoin in general and being kind of slow moving and hard to change, I think that is an argument that a lot of the crypto ecosystem used to try to sway investors to pour a bunch of money into all this other shit, right? Yep. But what's funny to me about it is it's a completely misguided conception of how things really work. So yeah, Bitcoin base chain is slow moving and hard to change, and it's that way for a reason.
Right.
Settlement layer. Exactly, yeah. But we also have all of these second and third layers being built on Bitcoin now with the Lightning Network, Taro, for example, which will be like a layer 3 on top of Lightning.
Right.
Other things coming as well. It's like the argument kind of falls apart when you start to explain Bitcoin in the layered approach. And I think it's like Bitcoin being compared to a tech company by a lot of people is the wrong way to look at it.
Right. It's the internet itself. It's not a tech company. If anything, like the altcoins are tech companies that are hoping to piggyback off of the groundbreaking breakthrough that the internet, aka Bitcoin, achieved or is providing. I think of layer twos. I have a bit of an interesting take on layer twos that, like, not just Lightning, but like I think of Cash App as a layer 2. I think of Coinbase as a layer 2. Like if we both have a Cash App, I mean, it's KYC layer 2, and it's a non-custodial layer 2, or it is a custodial layer 2 rather, but it moves Bitcoin value that's tracked on the main chain on the base layer.
Yep.
And it's instant. So whether it's an internal ledger on Cash App or it's an external ledger that's, done through Lightning channels, it's still a way to move Bitcoin. I think we'll see more and more of this. Like if the greater crypto ecosystem is to hope to survive, I do see that the most effective path for them is to try to figure out a way to move Bitcoin value in a better way than the Bitcoin base chain moves it, because that's not what and I think it's not what it's best suited for. It's best suited for me sending you $10 billion worth of Bitcoin and you knowing with absolute certainty after 30 minutes it's never getting clawed back. Like that's a breakthrough.
For sure. Yeah, I think like financial services on top of Bitcoin, like you mentioned, the Cash Apps of the world, I think is going to be very important as we like expand the pie of Bitcoiners in the world, just because we're going to be reaching less and less technical people over time, different age groups, things like that. And they're going to need like a super easy way to understand this thing where they don't have to, run their own node at home, hold their own private keys necessarily. And so I think those things will just become more and more popular, like the better the UX UI gets. And Lightning development is a huge part of facilitating that, as well as some of the projects being built on top of Lightning. But it's kind of funny because like all of the altcoins in the crypto space were started as a way to improve upon the things that Bitcoin was bad at, right? It's too slow. It's not going to scale. And now it's, it's fast on Lightning and it's scaling on Lightning.
Lightning is
and so it's
amazing. I sent, I had like 50 sats in a Breeze wallet, and I just wanted to try out the Cash App Lightning because they finally added it. I mean, as you know, like getting inbound liquidity is one of the biggest challenges with the Lightning network, especially reliable pathing and cheap, like low PPM fees. So I was checking out Cash App's liquidity or just like the Lightning experience, and it was insanely easy. I just like received 50 sats, QR code, copied it, pasted it in the Breeze wallet, and then it was like, check, it's done. And then I could convert my 50 sats into less than a penny, which I guess I got skimmed on the exchange rate there, but it's fine. It was cool, man. It was seamless. And
with things like Lightning address now, like that whole flow is getting even more seamless.
I don't even need to give an invoice. I can just send to it's like an email basically.
Yep. It's like sending an email. Yeah. Like, Don at Zebedee.com or whatever, for example.
Do you, and that reminds me this, so we post this episode, like all the podcast episodes on Fountain, which I saw got like temporarily suspended from Twitter yesterday. I
saw that too. Yeah, that was crazy.
I didn't follow up on why. I imagine it's because they like spoofed a Spotify picture, and maybe Spotify was like copyright infringement or something like that. I don't know. I have to
it could be
follow up, but anyway, assuming Fountain is still around, because I think it is. If you have a Fountain username, we split the sats for any tips. So it's cool, man. Like we got last episode, we got like 10, 20,000 sats, which I don't know. It's like a few bucks, but that's better than zero. And it like auto splits to the speakers and guests. Like you can't do that in Anchor. You can't do that in Spotify or Apple Podcasts and like that. And this is like, we're in like the first, maybe we're in the top of the second inning at this point. Like this is really going to change the game. We were talking yesterday about how Lyle and Vida and like how they can monetize educational, like if I'm like teaching, a group of baby boomers about how to take self-custody, like I could charge them, 10 cents a minute. And it's like, I don't have to manage the payments. I don't have to collect the invoice or I have to worry about accounts receivables. Like, no, it's all there in my wallet, self-custody immediately. And this is beginning, right? Yeah.
And that's the thing that's most exciting to me about Bitcoin is all of the other use cases that it can disrupt, right? You wouldn't necessarily think of like lawyers being able to monetize their time in real time, like as a Bitcoin application. But, you plug in Lightning to that workflow and it is a Bitcoin application. So value for value, all those types of models that will eventually get disrupted by Bitcoin is really what is exciting to me when I'm looking at like early stage businesses to be involved with.
Yeah. Yeah.
Just because it's so, like you said, it's so early, especially for those types of things. Like we're just getting started on those use cases that, if these companies get it right, it can be like a massive return and beneficial for society too, right? That's another one of the main things that is exciting about being involved in this space is you're actually doing good for the world instead of,
Do you view yourself as an impact investor?
No. I mean, I guess you could consider Bitcoin investors that. I don't necessarily look at myself that way. I just love Bitcoin and I want to do whatever I can to help it succeed. So
fair enough, man. Fair enough. Well, well, what are some signs like when you're looking at companies that is like, okay, that's a unicorn, or like that's going to be a winner. That leader has potential. And likewise, what are some signs? It's like, okay, that's a red flag.
Yeah, for sure. And it's really, so I do most of my investing in super early stage stuff, like, seed round, maybe even earlier, pre-seed round, where they're just getting started. So a lot of the times at that point, it's either an idea with nothing behind it, or like maybe they have like a beta app to play with.
So you're only investing in the founder, essentially.
Pretty much at that point, and the idea, right? So for me, like you have to think about the size of the potential market that the product is going after. First and foremost, like even if these guys do hit it out of the park, what's the size of the market that they're going to be playing in?
Right.
And then you have to look at is what they're building or attempting to build going to be defensible as far as a technology? So even if they have a great idea, and they build it and it works. If it's something a larger player can just come along and copy pretty easily, that is cause for concern.
Like a moat, right? Like an economic moat.
Yep.
Okay.
And that can be, whether that's the brand itself can be a moat, whether it's the technology they're building and they're able to patent certain parts of that. Things like that is what I would be looking for in that case. And then for the founder specifically, I always ask people like, why are you doing this? Number one. Number two, why right now? And you can learn a lot about the founder's motivations with just those couple of questions. And you can kind of just get a sense of their energy and their passion, which at the earliest stage is one of the most important things I've found for kind of being prerequisite for success, if that makes sense.
Yeah. Well, okay. Well, what opposite, like, what are some things if you saw, you'd be like, okay, nope. I'm like, maybe they'll succeed, but I'm not in. Like, what are some, or maybe you have some like anecdotal examples that you have that you could share, or just some more like general.
Yeah. I mean, one thing that comes to mind kind of right off the bat is just not being fully committed to the startup. Like a lot of the times I'll talk to people and they're like, well, I have this idea. I want to, get it started, but, I'm still kind of tied to my fiat job. And that kind of just tells me like they're not quite there yet as far as ready to fully dive in and make the jump. It's a lot of, it's 100%, commitment, day, night, whatever. You have to be, the only thing you're thinking about is your startup when you're an early stage startup founder. So if you're not ready to make that jump yet, like you're just setting yourself up for failure, in my opinion. And then the other thing is trying to like raise a lot of money or even any money like too soon in the process, I think is a bit of a red flag for me anyway. Like I like to see people at least have like something up and running that I can play with a little bit at least before they start going out and try to raise, $500,000 or whatever they're doing.
Right. Well, I had a, I don't know if you saw here in the show notes, I had dropped a list. It was like, venture capital red flag checklist. I thought maybe we could go through this for a few minutes.
Yeah.
So one of them is letting the good times roll. That would be a red flag. Second one, lack of a legitimate board. I think we already kind of talked about that. This is one I don't quite understand. So I'd like you to talk about super voting dual class stock. Now, I think this is what like Google has, where it's like Google A shares and B shares, but I'm not sure. So what is this super voting dual class stock, and how is that a red flag?
Yeah. So like a lot of the times when the company is first getting started, they'll issue what's called common shares of stock. So that'll be to the earliest employees, maybe some advisors, things like that. And then in later rounds of raising capital, say they go to raise like a Series A round after they've had some success, that would be like a Series A preferred stock. And so you have the preferred stock and you have the common stock. And with each of those come different rights as far as voting goes, as far as like what happens in the event of a bankruptcy or a liquidation. And so a lot of times if those different classes of stock have kind of like competing rights, it can cause some interesting situations. So one example that I saw kind of play out a little bit was with with Celsius this past year. So right before they went bankrupt and everything kind of crashed on them, they had raised a bunch of money from like a Canada pension fund and a couple other big investors. And during that, I think that was their B round, possibly, or maybe C, one of the two. Whoever those investors were got rights that kind of allowed them to shield themselves from everything that went wrong in the company later on.
Oh.
And so they were able to, like, they'll be first in line to salvage whatever is left, basically, of the company. And so it's kind of like if your founder's not careful with how the different classes get different rights, it can cause some problems between the investors later on, depending on what happens.
That's, I think, a clear explanation. Thanks. Well, the next one here is aversion to audits. I think that that one's pretty self-explanatory. This one's interesting too. Unique financial data presentations. it's very complicated. Don't worry. We've got it. You wouldn't understand it. Just know that we're making a ton of money. Right. This is a huge red flag. This is exactly what Sam Bankman-Fried did. Oh, it's like,
that's what I was just thinking. I'm sure you probably saw the screenshot of his org structure that was going around and all the different subsidiaries and
absurdity.
It's like,
well, and that leads me right to the next one, which is odd corporate location. Not only were they in the Bahamas, they had an entity in every darn shell country, every Seychelles and every other crazy, obscure country with bankruptcy protection that you could have, like just not looking good. And every, Alameda and what FTX were so deeply in bed with each other. Who even knows I don't even know why they had different names. They were the same people.
A lot of the time
they must have hired AngelList to do that thing.
Exactly. Now, I think like for US based investors specifically, like we want to see a Delaware C Corp. That's just the standard basically for investing into, and even like overseas companies. If you're a European company, you can have a Delaware C Corp be a subsidiary of your EU based entity as well. And you can run, venture capital that's raised in the US through that entity. And that just, it provides more protections to U.S. investors sometimes, as opposed to being money domiciled overseas. So
what we won't get into too deep here, but like what's the difference between a C Corp and an S Corp, and particularly in the context of like small businesses? And I assume they're all C Corp. Like seems like
Yep. Yeah. So C Corp is the standard for sure. S Corps and LLCs are more of a way to route retained earnings back to the owner of the business. So like a lot of doctors, for example, or like IT contractors, for example, will have an S Corp that is basically a way to like save on certain taxes and things like that.
Right.
That way you're paying for like the business expenses out of the S Corp, and then you're funneling whatever profit is left into your your personal account.
Personal income.
But yeah, any like large company that has a product that it's offering or has a bunch of like users and things like that, those will almost always be C Corps.
C Corps, cool. Yeah, I set up a LLC when I started doing the podcast because I was like, if I ever get sued, I don't know, I might say something dumb and get sued for like defamation or something. So I was like, I need some protection.
100%. Yeah.
So I didn't do an S Corp though. So hopefully I did that right. I did like the, what do you call it? Like sole prop LLC.
Right. Yeah, really, I think it depends on like income level. So like if the podcast gets super successful and you're making all kinds of money,
we only have
S
losses.
Corp might be more valuable. Got a few of those myself. Yeah.
This one microphone, which I did buy specifically for the podcast, cost more than like our entire lifetime earnings of the company so far. But if you build it, they will come, is what I'm told. And
exactly,
we are sparing no expense on the effort to make this quality good. So when people see it, hopefully they're impressed.
Right. Plus you get those sweet tax write-offs too on your LLC. So
yeah, but you can't do that forever. You have to eventually turn a profit. And I'm like, it's been a bear market for a few years now, or like for 2 tax years. So I'm like, all right, next year we're going to have a good year next year. You just wait, IRS.
Right. I think a lot of the Bitcoiners feel you there.
Yeah. Well, you host you were telling me earlier, you host a podcast, Orange Pill Addicts. Talk to us about that.
Yeah. So it's been a fun project. Myself and 2 other Kansas City Bitcoin friends started about a year ago now. Actually, exactly a year ago this week. And so we started it out not really having any idea what we were doing. Luckily for me, Brian, who's one of my co-hosts, really dove into the technical side of things and figured out how to make the audio work well, and all that good stuff there, the value for value stuff, how to get it plugged into all those channels.
Yeah.
And kind of the niche we found over time is interviewing like builders in the space. So we try to have a lot of like founders on, a lot of people who are just doing different things like self-sovereign focused. So like, for example, we had Seth for Privacy on here in the last couple of weeks, and that was a cool one. We talked to like Graham from Voltage, just people like that who are just, building in the space. And which is cool for me because then I kind of get to pull both of my Bitcoin passions together, which is, talking to founders, learning about what they're building, and then also just talking Bitcoin in general.
Right,
so
right. And do you guys do like, it's mostly interview style, like current events, or combination of both?
Yeah, it's mostly just like learning about kind of their background, like and then their company specifically. If we're talking to a founder, or like Seth Privacy, like his 10 bullet point guide that he put together, just like That's going cool. through those. So it's more of a, I don't know if it's really an interview as much as like just like learning about what they're working on. But
we Value Stack has had a similar sort of, we had no idea what the heck we were doing when we started, and I'm still not sure I do. And notice I changed from we to I because there used to be a co-host who I'm now doing it alone, but he's coming back for the year-end episode. Sam Callahan?
Yeah.
This episode will come out in early January, right after the year-end episode. And so this will be like the next one on the tails of that. So Sam Callahan and Bo, my old co-hosts, we're going to have a year-end, all three of us sitting in here. We're just going to talk about what a shitstorm of a year 2022 has been.
Yep.
And some predictions for 2023. So, but we used to do like current events. Bo and I would get together every 2 weeks and just kind of like update what the Bitcoin markets were doing. But he's a traditional like financial planner. And I think it sort of maybe is like he probably can't be doing like a lot of that stuff because of regulatory reasons. So, so I just started doing it on my own, and now I've switched to like a more interview style with people like yourself. And I've liked that format because I get to uncover like new ideas and new angles and talk to people who aren't just doing the same thing every 2 weeks,
For sure. Yeah. You mentioned doing it in person with your co-host, and that's something that's like the most fun for us too, because like we're all here in Kansas City, and like we can all go to Brian's house, like have a few high noons or whatever if it's summertime, and just let it rip. So
that's but next it's next Saturday or 2 Saturdays from now we're doing the year-end episode, and we planned this out like 2 months ago, and boy, now do we have some topics to talk about. This
totally
that little FTX thing happened, and the subsequent fallout of it. Gosh, it's been a crazy year.
Even like just Bitcoin itself, there's been a lot of change over 2022 that most people wouldn't expect, would have happened. So I think there's crypto has overshadowed Bitcoin, but Bitcoin itself has still had a pretty big year too, which is cool.
Or is there something like that you're thinking about specifically when you say that?
Yeah, I think for me, it's just all of the development that's happened on Lightning and all of the things that are coming out even on top of Lightning. Like I mentioned Terra briefly earlier, and things like Fediment, for example. I just think people are underestimating like how big these things can be for Bitcoin, and like what other applications it will enable to be built on Bitcoin that weren't possible before.
One of my first guests on the show when we started doing like the interview style was Thomas Jestifer. You know him?
Okay. Yep. From Amboss.
Yeah. Well, he used to be Bitcoin Kindergarten co-host, and I knew him before he started Amboss, and I had made this channel on YouTube used to be like a Bitcoin tutorials channel before it was the podcast, and I still do some, but I haven't done one in a while. And one of the first ones I did was like about Amboss, and I went and rewatched it like a couple weeks ago, and wow, the website has changed dramatically. I need to do like an updated one, but that was only like a year ago, like a year and a half maybe. So I mean, the number of nodes, because Amboss has a tracker of like, and this isn't the whole network, but just the registered nodes on Amboss, and it's like that's the real number go up, like the Lightning Network, while people still kind of scoff at its progress. And I've seen tweets like, Wrapped Bitcoin has more volume than the Lightning Network, and Rootstock has more pegged Bitcoin than the whatever, man. Like these Lightning, once it's built to like, it's not going to go backwards. Like there's not going to be this catastrophic custodial event in Lightning. I don't think like where, all of the wrapped Bitcoin get redeemed in one day because there's some kind of liquidity crunch or there's some bridge where, whatever breaks. And I think the Lightning Network's slow and steady progress is the most encouraging aspect of Bitcoin's development today. Would you agree with that? It sounds like
for sure. Yeah. And I think like one of the cool things too to understand is like Lightning is modular, right? So even if like one company that's built on top of Lightning fails, it doesn't bring down the entire network. Like, for example, like on Ethereum with the wrapped Bitcoin, if BitGo gets rugged, you don't get your Bitcoin back, right? So it's like, it's so much different as far as security models.
Well, even this year, like Barack had the I forget his Twitter name, but he like broke LND twice, right? Like, and like that didn't break the Lightning network because LND, now granted, LND is like the most, by extreme margins, widely used implementation of it, but there are other implementations of Lightning, right? So it's that same thing we were talking about earlier. It's like, you know, if it doesn't kill it, makes it stronger. It's like, well, it weakened, you know, at temporarily maimed the strength of the Lightning network because a lot of nodes that were running LND were not running correctly. But now LND is stronger, and now the whole protocol is stronger as a result.
Exactly, yeah, and we have more, you know, impetus for more Bitcoin companies to support the different Lightning implementations too, as well. So, like, pretty much right after that, you saw companies coming out and say, "Okay, we're going to start, you know, supporting the other versions of Lightning as well." And I think that's a good thing.
Right. We don't want the single point of failure on our implementation, even.
Yep.
Well, is that, do you see that being like the continuing narrative for the rest of this cycle? Just kind of like the growth of the Lightning network? Because we don't really have much. I mean, I guess Bitcoin don't really do much, right? It's like the stick, like do something.
Right.
No, not that. Not that. Not that. But is that like, I guess we got what, 16 months or so till the halving? Is that what you're going to be kind of focused on from here out until then?
Yeah, I think so. Yeah. And I just think that even like within Lightning, the development is going to be like hot and heavy as far as like different assets being issued on top of Lightning with Taro or different protocols similar to that. And that'll be interesting to see play out because I'm sure we'll see, you know, stable coins come to Lightning. I'm sure we'll see like some what I would probably consider shit coins come to Lightning via Taro.
Here we go all over again.
Yep, exactly. But it's the whole thing where, you know, free market will decide whether these are worth anything or not. But it's cool that now even, you know, developers who maybe would only have developed on Ethereum or Solana or AVAX before
have an opportunity
because they wanted to do a specific project. Yeah, now they have the opportunity to build on something that's at least secure and stable and pegged to Bitcoin, right? I mean, at the end of the day, if it's running on Lightning, it's pegged to Bitcoin.
That's right. And the settlement layer is the security model that it's using. So,
yep. So it'll be fun to watch that development. And you mentioned the halving. I guess I'm probably less of like a cycle guy than a lot of people. I think at this point, the halving will be less and less impactful as we move forward. I do think we probably have one more good bull run like this next halving. But I think that might be kind of the last one.
There's the bullishness I need to hear.
Yeah. Oh yeah. I'm always bullish. Yeah.
I agree with you. I think the data has showed that the halving cycles have become less and less impactful as far as like magnitude.
Right.
We'll see. What happens.
And it's just more people are more aware of it now, right? So it's kind of like the self-fulfilling prophecy. Like everybody knows it's going to be summer 2024 and everybody's expecting the price to run up shortly thereafter. And
so it won't.
Now that everybody's expecting that, it probably won't, right?
So then it will. This is reverse psychology.
Yeah. Maybe even before this time.
I'm bullish for next year. I actually think 2024 is not going to be great. But I think next year is going to be gangbusters. And I say that every year, but, you know, never gone wrong. Never gotten hurt being optimistic. So
exactly.
But I do. Yep. I follow this, just sort of general market sentiment, and there's no math really to this, but it's more of just like I read the room and try to understand. And this, I think a lot of this came from just being in traditional finance, like before Bitcoin, and you can just sort of get a pulse if you pay attention, like what the general sentiment is and like the cycles of sentiment. And, you know, when people are texting me, yo, dude, I just made $100,000 flipping a picture of a monkey. Why don't you get in? Right? Like if you are a disciplined individual and take a moment to say, okay, what the hell's going on here? Might be a little bit of euphoria. Right. And likewise today, those same friends are texting me dancing on my grave saying, thank God I didn't get into crypto when you told me to. I was like, well, I never said to get into crypto, but okay. That reverse sentiment now, I just don't think we can hang, because we're there now. We can hang out there for a while, right? But I don't think we hang out there for another 12 months. I just historically and again, this is like kind of like more just from my own personal anecdotal experience, but like I don't think we've never stayed in that like sort of depression capitulation cycle for a full year. And we've already been in there for a few months, I would say.
Yeah. I think so too. And I think like the other part of it for me is I think probably the macro environment will shift a lot in the next year as well. Like if I had to bet, when the Fed pivots coming, I would probably guess within the next year.
For sure. They have to.
Will also be a big benefit to Bitcoin and everything else that's out on the risk curve as well.
So I'm thinking like 2024, as you sort of said, that everybody's expecting, having, supply shock number go up.
Right.
That's why I think based on where the sentiment is now and that everybody's expecting 2024 to be gangbusters, I think next year is where the real returns are. But I have no clue, and I don't really care.
No clue.
I don't care really, because like I'm just going to keep doing the same thing I've been doing, which is DCA and stacking sats. And I think for 99.99% of people, except for those who are accredited investors and who have the sufficient capital to be able to have the privilege of diversification, they should all just stack sats, right? Except for that small minority. And those who have that ability should invest in those companies so that the ecosystem can succeed. Because without any of these companies that are adding to the user experience and the pushing the ecosystem forward, right? Like the whole asset won't succeed.
Totally. That's my opinion for sure. And I think like right now is a great time to get involved if you haven't been yet and you're able to get involved in writing some, small checks to Bitcoin companies. You're going to get a much better entry point now than you would have anytime in the last couple of years, for sure.
Way better valuation, way better multiple. You get more preferential cap on the raises. What are some, are you able to talk about some of the companies that you've invested in and just like kind of maybe give a sentence or two and why what you really saw in that company, why you invested in it?
Yeah, for sure. And we kind of mentioned Vida a little bit earlier, and I am an investor in Vida. And for me, I think just unlocking, people's associating value to people's time is just going to be more and more important as the future moves on. And we kind of move to this more like peer-to-peer value for value society. And Vida and Lyle and his team are really, I think, the team to unlock a lot of that. And him as a person, his two co-founders, just they have immense startup experience, couple successful exits for multiple members of the team there is really attractive to me as well. So excited about them.
That's that's one you forgot to list in the success signs, like good signs. A founder has successfully exited a company before. That's a good sign.
That goes a long way for sure. Yep. But I'm an investor in, probably 20 or so Bitcoin companies at this point. Everything from Galoy to Swan, kind of all over the place. So anywhere that I think, can make an impact to the Bitcoin ecosystem, I'm happy to help support. So
I think I had seen you tweet about Crowd Health. Was that one that you were involved in?
I am not involved with them specifically. I like what they're doing. And I think if they can make that work, I think that'll be a cool one.
I guess I was wondering, because given your background, like working through Cerner, I was like, maybe that's one that like really stands out to you but as a matter of fact, though, given that you have that background and you're not involved, I don't know. I don't want to draw conclusions on any which way, but cool. Well, maybe I'll cut that part out. I don't know.
Yeah, it's all good.
Well, when we're on a Bitcoin standard, like, do you think people are just going to, or I guess like rather, how long do we take to get to a Bitcoin standard? Is it in our lifetime? And what does that look like? Am I just walking up to the doctor or to the grocery store clerk and just like scanning a QR code? Or
I think we will see hyper Bitcoinization in our lifetime. I think within the next 40, maybe 50 years. I don't see how the current system could last any longer than that.
I'd
be surprised if it even lasted that long, to be honest with you.
Right. That'd be another. It's only been 50 years, really, the fiat system, right? So
exactly. Yeah. So I think for sure by then fiat will be dead. And like, I just don't know what else would take its place other than Bitcoin. Right. I think when CBDCs start coming out hot and heavy, I think that's just going to be a massive, massive marketing campaign for Bitcoin itself.
Sure.
Because Bitcoin is the opposite of everything a CBDC stands for. And so I think that'll push us a long ways towards a Bitcoin standard. But as far as, what it looks like, I think it's just, to me, it just means people are able to save again, right? You're able to save in a money that you don't have to speculate with to get returns to outpace the rate of monetary inflation. And so that's what I'm most excited for. People can be less of an investor day to day and more of a saver. And I think that'll just unlock a lot of like societal benefits as well. It'll give people more time to get back to, maybe pursuing hobbies or sciences.
Where the efficiency gains come from. I mean, exactly. I think it was Mises or Hayek, one of the Austrian economists, that said that the only way to truly grow economic potential is through efficiency gains and capital increase in capital efficiency. So the more that we can spend our time on engineering problems and sort of solving that efficiency, technological growth, that's how we truly sustainably grow, rather than these like capital injections, which are like crack highs, and then we get the crash, on the come down right after. It's like those aren't sustainable ways. And if you were to look at, I guess, like if you were to look in the rearview mirror, a lot of people would say, well, I mean, look at Denver, or look at Los Angeles, or look at any of these like major metro cities that have come up in the last 50 years and say, well, see, it works. But then I would say, like, okay, like zoom, like you're looking at the picture of the city from like 50 miles away. Like, now go walk downtown and tell me.
Right, look at the infrastructure.
Yeah, and look at the homeless people standing on the street, like panhandling, and like tell me that's a sign of a healthy economy and a healthy city and a healthy currency. It's not. And, those things happen like everywhere, but when it's everywhere is when you just like, okay, clearly this isn't an individual problem. This is a systemic thing.
Totally. Yeah. And I dove into some research probably about a year ago now for an article I did for Bitcoin Magazine, looking at how society functions under like a hard money, low time preference standard as opposed to a fiat standard. And I mean, it's pretty amazing. Like if you use the ancient Romans, for example, where they developed everything from like aqueducts to like modern city streets and things like that. All of that is only possible when you have the low time preference to be able to invest in those types of engineering feats, which we haven't had.
When you've got, I think this is a like relevant point to you being an investor. It's like, okay, investing is challenging, right? You said yourself, like most of these things go to zero. And you have an experience as a founder. You have experience investing in founders, and I'm sure some of them haven't worked out. So you have this like work that you've put in to get to this level of mastery, and only then is it like even possible to succeed, not even guaranteed, right? And so for the average person who's just like working like maybe doesn't have a college degree, or like works like a, regular jobs, not super, tech or investing sophisticated. Like, how can they succeed in this economy? Like, because they don't have the investment know-how to actually grow their money at a positive rate of return over inflation. So they don't invest because they're like, that's risky. And so they stay in cash, and they get, they get crushed over a longer period. Right. I mean, not overnight, like Bitcoin could drop, 50% in a day. It has, but I mean, it's a guarantee that your dollar purchasing power will lose value over time. And it basically pushes people out into the risk curve that have no business being there. And it creates a lot of malinvestment, and it creates a lot of capital destruction, all as a result of this. If they could just save and sound money, the people who should invest would invest, and that's it.
Exactly. Yeah. And like today, I mean, that is also a big reason we see all of the societal divisiveness, right? Because the haves are keep getting richer and the have-nots keep getting poorer just based on not being able to keep up with the rising costs of things. And when you don't have any savings, you're living, paycheck to paycheck, you're going to be mad at somebody, right? If you can't afford things that you used to be able to afford in, the year before, because the Fed decided to print 40% of all dollars over the last 2 years, right? And so you're going to be mad at somebody. And, then you see rise of politicians who kind of, play to that. And you get to the point where we're at now where the sides are so opposed, like they can't even have a constructive dialogue about anything. It's just everybody hates everybody else, right? And so that's all a symptom of a broken money, which leads to broken societies. So I just hope, you and I live long enough to kind of see the other side of that on the Bitcoin standard. And, if we don't, our kids will. So that's one thing that keeps me going as well. Like I have 3 little ones and I want them to have a better world when they're, when they're my age. So
that's what it's all about, man. I haven't really, I think that's part of what really attracted me to Bitcoin, was that I didn't really find a cause that I could in good conscience get behind until Bitcoin. Like I was like, because I was like, okay, there's something wrong with the world. I don't know what it is, but like Tinder doesn't seem right. Facebook doesn't seem right. World of Warcraft friends don't seem right. Like something's wrong.
The Bachelor.
Here. Yeah.
Bachelor in Paradise.
Like the reality shows, like even, I love the cooking shows, but like, I'm sorry, Master Chef, like don't be mean to this person. They're on TV, like anyway, there's some kind of cultural sickness that I have been picking up on for a long time. And I thought like it had to do with like wealth inequality. Well, come to find out, okay, well, why is the wealth inequality, right? It's sort of like derivatives. And you're like, okay, the housing market's the problem. Well, actually, no, it's the CDOs that are problem. Actually, it's the CDO squareds that are problem. Actually, it's the Fed that let all this stuff happen, right? And you just keep going further and further until you find like the root cause. And it led me to the money's broken. And it was such a simple thing. Was like, okay, well, I know the problem, but like, what's the solution, right? Like, is it gold? Is it silver? Well, maybe it was at one point, but like we saw how that worked out. Like they can take it from me physically, and like so. Something you said earlier about like I'm maybe 40 or 50 years, but like the dollars, like it's gonna happen, right? And I think at least I think that too, where I'm still not 100% or even like 99 on Bitcoin success, but I'm like 10,000% sure that the dollar will fail. And, and so by default, I'm like, okay, if it fails, something must succeed it.
Right.
So I'm making a weighted bet that thing is the thing that will succeed will be the dollar, or succeed the dollar will be Bitcoin. But I'm not as confident of that as I am that the dollar will not succeed long term. Would you say that that's a pretty accurate, or like, do you share that belief, or if different, what do you think?
Yeah, I think so for the most part. I think to me, like I ask myself, if not Bitcoin, then what, right? And I can't really think of the then what. So to me, it's like, okay. I mean, Bitcoin is the only stateless money that isn't controlled by anyone. You see a lot of quote unquote like geopolitical experts point to like maybe it'll be the Chinese yuan, or maybe it'll be Russia
like these
combining forces with other folks to have a new like commodity backed currency, for example. But I think you still have the same problems you have with fiat in that scenario, where it's still controlled by someone.
Right.
You still have, at the end of the day, you have somebody who can, censor the money if they choose to. And Bitcoin's the only one where you can't do that. So I think, all roads point to Bitcoin. I mean, sure, it can still fail technologically. I put a very small chance on that happening, but it's certainly a possibility. So it's not, 100%, but I think it's probably the closest thing to 100% out there.
I think it's well said. I agree with that. And, these central bank like digital currencies are going to come on the scene, right? Like they're going to happen. Like you said, it's going to be the world's best marketing stunt for Bitcoin. I've got this quote here pulled up. Have you ever heard of the Tao Te Ching? It's like with the Taoism religion. It's not really a religion, more like a way of life based on.
Okay, no.
Well, it's like an Eastern philosophy book from thousands of years ago. I got this it's like a couple sentences. reminds me of this quote. Should you want to contain something, you must deliberately let it expand. Should you want to weaken something, you must deliberately let it grow strong. Should you want to eliminate something, you must deliberately allow it to flourish. Should you want to take something away, you must deliberately grant it access. The lesson here is called the wisdom of obscurity. The gentle outlast the strong. The obscure outlasts the obvious. Fish cannot leave deep waters, and a country's weapons should never be displayed. And it makes me think of if we really want Bitcoin to succeed, we have to let the bodies float along the river by, right? Like we need to let central bank digital currencies create themselves and blow themselves up.
Yep.
If we want to have self-custody be the most important aspect of Bitcoin, we need to create I'm careful when I say this because I don't want people to suffer, right? But suffering is a way of life. I mean, it's actually it's not samsara is anyway, we won't get into all that, but
it's a part of learning, right?
Yeah. It's natural to humans. If you want and feel a desire, then suffering is a result of that, and it's native to human existence. But my point here, where these FTX type events have to happen. If you want people to succeed, you have to let them make mistakes. If you want something to flourish, you have to deliberately. If you want something to blow itself up, let it grow itself, right? Like the BlockFi example, it got so big that it capsized under its own weight. I think FTX was probably no different. So I almost think you could say that about all the NFTs and altcoin stuff too. It's we've got to let it, rather than try to say, no, you shouldn't do it. It's well, look, we'll be here when you're ready.
Exactly. Yep.
And
Bitcoin, everybody gets Bitcoin when they deserve it, right? I like that saying, which is so true.
You get Bitcoin at the price you deserve.
Yep.
Love it, man.
Some people have to take a few more paths through, everything else to get to that point than other people. And that's fine. Like you said, Bitcoin will be there when you're ready. And the tools are getting better and better every day in order to facilitate people coming on board when they are ready. And if everybody came at once, Bitcoin probably couldn't handle that. So I think the way, nature works and the way human nature works, it's beneficial to kind of have this hyper-Bitcoinization process play out over, a longer period of time than not.
Just going with the flow.
Exactly. Yep.
Woosah, bear market what?
Right.
It's interesting that you say that though, because I firmly believe that if dollar collapse tomorrow, we're going to be in a hell of a lot worse off position from both a Bitcoin adoption standpoint and just humanity, not a great time to be alive standpoint. So as much as I want Bitcoin to succeed, as much as I want us to be, the new billionaire is 10 Bitcoin, right?
Yep.
I don't think it's ready. Would you agree with that?
Totally. Yep. I think in order to have as peaceful a transition as possible, it has to happen over a longer period of time, right. Slowly but surely, right? And then once people are more familiar with Bitcoin, slowly over time, that shock won't be as big as it would be if
and the user experience
tomorrow,
will have improved. The security model of self-custody will have improved. Lightning Network will be a lot more reliable. The nodes will be more decentralized. The hash power will be more decentralized. The transaction fees will make up a bigger amount of the block reward. All of these things are indicative of a healthier, growing ecosystem within Bitcoin, exactly how it should be. But yeah, we don't want to put the cart before the horse and try to support the entire global economy when it's people are losing their private keys because they don't know how to save them, or that could be worse. I mean, it'd be good for the people who don't lose them, because Satoshi said himself, right? Lose your Bitcoin. It's a donation to everyone. It's equitable.
Yep. And I think too, on a practical perspective, just using and spending Bitcoin, we're not ready for that to be an everyday occurrence yet. It's still pretty difficult for merchants specifically to be able to get set up and running to accept Bitcoin, especially in a self-sovereign way. It's getting easier over time. And, a lot of people are building a lot of really cool solutions to help facilitate that. But I think, if tomorrow everybody needed to use Bitcoin to buy and sell things,
they'd be in trouble.
We'd be in big trouble.
And the mempool would be whack, dude. It'd
be lit. Yeah, for sure.
75 sats per byte, like at 2 a.m.
That would make the BSV attack of 2017 on the mempool look like child's play for sure.
Oh man, it is like it's quite a journey that we're on. This whole idea of like building a new system for humanity to, build a new framework of what it's like to be a human on Earth. Like that's a pretty
heavy stuff.
Pretty heavy stuff. Pretty big undertaking. No big deal. Like,
but awesome to be a part of, right? Especially like I'm sure you might have read it. A lot of Bitcoiners have read, books like The Fourth Turning or The Sovereign Individual.
Both.
And like if you read The Fourth Turning, people in our generation are the heroes of this turning. And so it's up to us to really facilitate this transition in a way that will allow everybody that comes after us to benefit. So it's pretty cool to be in this place at this time.
What an optimistic and like warm way to kind of like wrap up the episode. It's like, you mentioned having kids, and it's like, that's what you do. Like, it's to build a better world. And I never believed, I think that's kind of how we got on to like started this whole kind of third part of the episode. It's like, I never believed there was a way to actually make an impact. Because I was like, I'm just one guy. Like, it's systems the way it is. It's always going to be this way. And it's like, now maybe even in my lifetime, I don't see those effects. But there's a possibility that I make an impact, and that impact could be positive. And it could be, sure, like maybe the first order isn't like super huge, but maybe like the 10th order ripple effect of that changes somebody's life. Like that's why I love working in this industry, because I truly get to see the one-on-one reactions of people and like help them make a difference in their life. That's why I like financial planning too, Don. It was like, these people will come to me and be like, I have no idea what I'm doing. I don't know. I make good money, but I'm a horrible investor, and I get scared every time the market goes down, and I sell, and then I buy back in at the top, and then I do it all over again, rinse, repeat, and that's why I'm not rich. And I'm like, we're going to help you. We're going to plan it out.
Yep.
And like, that's, I think, like, as long as us Bitcoiners don't lose the plot of like, Bitcoin is a tool to make life on Earth better for humanity. That's like what we got to stay focused on, right? Because if it's just about getting the number on a screen, number go up, let me drive my fancy, my Toyota Corolla inside of the office, right? Like that was the thing that they didn't mention. Like he was driving the thing inside the office on the 20th floor. As long as we don't lose the plot that like this is meant to uplift people, to make the world a better place, to increase equality and enrich people's lives, because life's short, right? Like, life's short, and the halvings are even shorter. Bitcoin, you're only going to be able to accumulate a whole Bitcoin for so long,
right? And you're only going to be able to help all your friends and family get in as well before. I mean, it won't be too late, but before it has a large impact on their life. So I think that's another thing that, kind of keeps me passionate about Bitcoin, is like, there's still so many people out there who don't understand the first thing about what this is, what it can mean to society overall, them individually, for their families, et cetera. I think we have, and during the bear market's a great time to go out and evangelize for Bitcoin, because things aren't as crazy day to day, and people they're not forced to make quick decisions, right?
Right. They're not panicking. It's like, it was 30K, now it's 45. I got to get in.
Right.
Yeah. Take a more measured, level-headed approach.
And give people some resources to really understand why Bitcoin is different than everything else. And, like you said, being a financial planner lens, like where it can fit into their overall portfolio, I think is important for a lot of people to understand too. Even if they don't quite get Bitcoin yet, it can still make sense for them to include it in their overall savings, right?
Yep. Yeah. Is this something that you sort of try to teach throughout the meetup in Kansas City? Like, do you keep it pretty basic, or do you have like quite a technical crew there?
Yeah, kind of both. So like the way we'll do it is we'll have like some more technical like sessions focused on different aspects of Bitcoin, and kind of like, people who are interested in that side can come out. And then maybe the next week we'll have like an investment case like presentation for Bitcoin, where more like financial minded people can participate. But I also do like some consulting work around town with individuals and businesses that just help them understand what Bitcoin is and like how it can benefit either them personally or their business. And so that's been fun as well. It's interesting to see like what kinds of like businesses specifically are interested in Bitcoin, and like why they're interested. It's always kind of cool to see. There's just kind of like a wide range of people and reasons that they've heard about Bitcoin. So
you think one thing I haven't seen yet is a miner exhaust heat used as a smoker. Like, because you could get it, like you could probably keep that, right around 220.
Yeah,
nice firm.
I like where your head's at.
24/7 consistent output, heat, temperature, all the same. I haven't seen that yet.
We need some of our Kansas City barbecue spots to try that out.
That was a stretch to tie those topics together, but I think I did it.
That's pretty good. Yeah, that was pretty good.
No, I've seen like a hot tub heated, hash to heating. I've seen the guy with the waste cooking oil, and I was just like, you could do like a smoke room and just have, because who cares about the sound of the thing? And, I don't know, maybe the smoke would be an issue for the miners. But if it's like S9s, who gives a crap, right? Like you're not.
Yeah, that's what I was thinking. Yeah.
Like they're $50 a pop at this point, or maybe a little more, but they shouldn't be more than that.
Yeah, a functional heater at this point.
Yeah,
mostly.
I was like, if I didn't have a space heater already, because I live in Colorado, it gets cold during the winter, right? I was like, I would buy an S9 if it was the same cost as the heater, because it's a white noise machine, it's a space heater, and it earns Bitcoin at a loss, but like it's a sunk cost because I'm using it for heat, right? So that's the only reason I would buy one like that. Or if I was opening a new business where we called it like damn, I was hoping I was going to come up with something good. Hash to smoke or something like that. I don't know.
Yeah, for sure. Yeah.
You could call it smoking hash. That was what I was about to say.
Kind of industry.
Smoking hash. And you're not sure what we're doing in there.
You just know we're having a good time doing it.
Oh, man. Well, all right. Is there a Kansas City barbecue sauce that's your favorite that everybody should go and buy online or in store?
I'm still partial to Jack Stack. I know a lot of people would say that's not like the Kansas City go-to. A lot of people would point you to like an Arthur Bryant's or a Gates or something that's been around, forever. But the bang for my buck is Jack Stack all the way. I love it. I love their sauces. They have a spicy sauce that is definitely my hands down favorite. So the cool thing about them too is they ship nationwide. So like if anybody needs a Christmas present, you can go on the Jack Stack website, order it straight to their door for delivery, and it's just as good as it is, in store. So I've done that with a few people. And
can we get them set up with BTC Pay Server?
Trust me, we're trying. We've had some conversations, making the rounds to all the Kansas City businesses that we frequent. Yeah. So
all in good time.
I hope it's coming soon.
As we mentioned, it'll happen exactly how it's supposed to. I believe that
for sure.
Any active part that we can take in helping the mission, I'm all about. The local merchants, the small businesses, they're the ones that really get hit by these like transaction fees the most because they don't do as much volume, right? So they're also the ones who probably have had the hardest road the last couple of years, particularly like in a restaurant or like retail business where they were affected or closed by the pandemic stuff for a while. So yeah, man, I think like, that's why Cash App and Square is like so exciting for me because they already have the point of sale. It's everywhere. They've got the Cash App, which is like the user side, opposite side. Now they just need to like integrate Lightning into their point of sale terminals and let people pay with Cash App. And it's like overnight, like millions of people now can use and pay for Bitcoin in a way that they actually feel confident in doing it, right? Like if I've got to go through 15 steps to pay for Bitcoin. Even me, I'm like, fine, here's the credit card. Like, screw it.
Yep.
So
I imagine that's coming. I mean, I wouldn't think they're going down this whole Bitcoin roadmap without that being part of it, Cash App specifically. So
100% Square is absolutely going to be building Bitcoin into their point of sale terminals, and Cash App already has Bitcoin into their user app, and they already have the debit card, which today only allows you to spend dollars, but come on, it's going to allow you to spend Bitcoin and exchange it at the point of sale, at the moment of point of sale in the future, I'm sure. And you can already send Bitcoin to your friends, and not Cash App, but Block is working on a 2 of 3 simple as all heck multi-sig wallet, so that when people inevitably lose their phones, they don't lose their darn Bitcoin too, because it's going to happen. So that I think Block is going to be doing big things for Bitcoin. I'm very excited what they accomplish.
And you also have like the Strike and the NCR partnership, right? So I know that's in the works. A lot of big merchants are going to be coming on board with Bitcoin payments in the next year or so. And I mean, that just is that just proves to me that the Bitcoin user base is growing. If it wasn't, there wouldn't be demand for these types of products and partnerships, and it's just becoming more ubiquitous.
You don't uncross the Rubicon.
Exactly. Good description. Yep.
Well, we're running an hour and a half here, Don. That was all the topics and questions I had. Did you have anything else that you wanted to tell our listeners about, or just give a shout out? Anything else on your mind?
Yeah, for sure. Yeah, thanks for having me on. First of all, really enjoyed the conversation. And yeah, anybody that's interested in maybe getting involved with like angel investing in Bitcoin companies, if you're an accredited investor, you can join some of the syndicates that we chatted a little bit about on Angel List. There's a handful of awesome Bitcoin only syndicates out there to join. And if not, there's also a way that even unaccredited investors can sometimes participate in early stage venture capital through Reg CF offerings, which sometimes companies will set up that allow anybody to participate. And I think we're going to see more and more Bitcoin companies set themselves up to be able to raise money from unaccredited investors as well. So I'm pretty excited about that because, as Bitcoiners, I think a lot of us would agree the accreditation rules are pretty much bullshit and people should be able to invest their money however they see fit. So I'm glad that there's more and more opportunity for people to be able to do that. So yeah, I mean, I guess in closing, I think now's a good time to get involved in this little subsector of the Bitcoin space if you're interested. And people feel free to hit me up. Happy to answer any questions. So I'm on Twitter, I'm at KC Hodl. And you can find all the information about SAT Standard at satstandard.capital.
Awesome, man. That's a great summary. We're block 765. 765.
Okay.
It's not a palindrome, but it's a repeating block. So that's good. I think that's good luck.
And we're not as poor as we were about a week ago, so I'll take it.
Don, I have more Bitcoin than I had last week. And luckily I don't measure my return in dollar value. So
yeah, exactly. Especially right now.
What do you mean? This year's been easy, dude. One Bitcoin is one Bitcoin,
Right.
Easy when it's going up to say that, but not so easy when it's going down. Well,
it'll go back up again. That much I'm confident in.
It will. Well, at least in fiat terms, because as we had said, like dollar, they're not going to just solve the budget. They're not going to solve the national debt. They're not going to all of a sudden dollar become a store of value and go back to a finite number, and that's not happening. So it's just a matter of waiting for the bodies to float along the river, I guess they say in the art of war. So.
Exactly. Yep.
Well, my man, thank you so much for carving out part of your day to chat with me. I really enjoyed this conversation. I hope our listeners find some nuggets here in the investing and VC side. I certainly did. You said at KC Hodl is where is your Twitter, and awesome. Yeah, man. Maybe I'll come on Orange Pill Addicts sometime if you're down. I'd love to do that.
Heck yeah. Would love it. Yeah. And thanks for the time, Zach. And it's fun getting to know you a little bit.
Likewise. Cool. Well, if you enjoy the episode, hit that subscribe button and share with your friends, download whatever you do with the podcast. We're on Fountain app. You can give us a tip and we'll split. It'll automatically split between Don and I. So thanks for listening. We'll see you next time.